Welcome to the new video series. In this video series, I will be introducing you to a new company called Aduro Clean Technologies. Now, before we get into the thesis, I want to walk you through the journey that happened to me and how I got introduced to this idea. So, I was studying a different company in a different industry. And I expressed an interest to one of my friends that I needed someone to help me understand that industry. So my friend introduced me to a guy named, and he's a major shareholder in Aduro. And so he helped me understand a different industry. He spent some hours with me on the phone, talking to me about a different industry. And I ended up understanding the industry better and ended up investing in that particular company, in that industry. But through that education, I got to know him better. And as with, friendships that you build in investing, many times you would share other investment ideas that are interesting. So he shared Aduro with me. And I didn't want to look at it. I really didn't want to look at it because it didn't have any. Aduro doesn't have any revenues right now, so it doesn't have any revenues. It it only has expenses, so it loses money, right? No revenues. So I didn't want to look at it because for me revenues are important, because when you have a company with revenues, then you know that this company is solving somebody else's problem, and that somebody else is paying this company with money, is voting with money to get that solution that the company is providing. With companies that don't have any revenues, it's much riskier. So I don't really want to look at companies like this. But, and he didn't push. He didn't push. He was like, okay, I said it's too early for me. But then, from time to time, he would send me a text about something in that industry. And so I looked at it more and more. And then at some point, I was thinking to myself, you know what? He has a massive position in Aduro. He's a professional. He's an investment professional. So no amateur or anything like this. He clearly is smart based on how much knowledge he had in the previous industry. I was like, you know what? I need to look more closely into this, because in the first 3 inches, it's it has no revenues. It's I'm not touching it, right? So I need to look a little bit more. And I started to get more and more interested. So I started to ask him more and more questions. And, he introduced me to the management. I had calls with the management, and the opportunity was almost too good to be true, because Aduro is claiming to solve this major problem that so many big companies in the world need a solution for, especially more that there is a deadline, 2025 deadline, and I will talk about that. In other words, major companies in the world have to solve this problem or commit to a solution to this problem by 2025, right? And we're in 2022. And there is not a very good solution out there. And this company is claiming that they have a solution. So I was like, if you solve this problem and you provide a solution to this problem, this is massive. And now, so even though this company doesn't have revenues, if I can figure out whether the solution that they have is going to create revenues, then okay, then I'm interested, because at the end of the day, just because a company doesn't have revenues doesn't mean it's not going to have revenues, and it doesn't mean it's not hugely valuable. It just means that it's more risky. And it also means that you have to put in more work to understand the opportunity. So I said, if I am to get involved, if I am to ever get invested in this, I have to take everything apart. I have to look at everything. I have to talk with everybody. I have to talk with the CEO, CFO, major shareholders, directors, your customers, potential customers, your scientists. I have to visit you. I cannot leave any rock unturned. Like for this kind of opportunity, I have to do everything. So that's what ended up happening. I spent endless hours talking to the CEO, CFO, more to him, who is a major shareholder. I talked with their potential customer. I say potential because there's no revenues yet, right? Entities that they are involved with. I got on the phone. I talked with one potential customer, another potential customer, and then I ended up going to Canada to visit their facility. And when I was there, I got to meet the CEO in person, and I got to meet the scientist team, right? I was in this room, and there was like 4 or 5 of them, okay? And the one with the least education was the one with 1 PhD, right? The rest of them had like multiple PhDs. I think all of them are from India. I felt so dumb sitting in the room with all of these PhDs, and they were presenting to me the company and the technology for like 7 hours. It was like an overload. But I realized, wow, these guys are for real. Like, these scientists, promotion and hype is the last thing on their mind, because they are sleeping and dreaming their profession. They're obsessed with their profession. So I'm like, okay, there is something here. And this is the moment when I got seriously interested. And what I ended up doing is I bought 450,000 shares of Aduro for my personal account. We all complain about various problems that we have in our lives. But I like to say that I love problems when it comes to my companies being able to solve them. You see, as I said before, revenues are not just there on the computer screen, in an Excel sheet, in an income statement. Companies generate revenues because they successfully provide a solution for somebody else, okay? So let's talk about the big problem. What is that big, huge problem that Aduro is claiming to solve? What is this? This is plastic. What's wrong with plastic? Well, haven't we all heard movies, or haven't we all read or seen pictures on the internet of plastic getting piled on the beaches, in the ocean? We are drowning in plastic, right? And plastic gets a lot of bad rep. So because of this, in 2025, plastic producers, companies involved in plastic, they have a deadline. They have to figure out how to recycle plastic so that plastic can be produced, recycled, and reused again for production of more plastic or production of other things. So I encourage you to go to the internet, Google 2025 plastic recycling or 2025 plastics circular economy, and read up on the subject. You will learn that governments around the world are mandating that the big plastic producers, like manufacturers of, like you have a Snickers bar and you have the packaging, right? They have to solve the plastic recycling problem, or they have to commit to a particular technology that does that. Now, if you look at the world right now, and various different articles you can read, you will learn that, depending on what you read, 6 to 10% of plastic gets recycled. And plastic recycling is also kind of gets bad rep from the point of view of recycling, because it's almost like a scam. A lot of people around the world have, plastic, one-time plastic, and they, put it in a recycling bin because it has that, recycling sign, and they think that it gets recycled. But most of the time, it just ends up being in a landfill. And that's because the world doesn't have a very good solution. The solutions for plastic recycling right now can only deal with a very specific plastic, okay? Very specific type of plastic. The majority, about 80% of plastic, is very hard to recycle. And also the current technologies that are out there, they take too much energy to get the job done. The technologies are not scalable. And as I said before, they only work with certain plastics, very, very specific plastic. And if you have a packaging and it has a little bit of other thing like paper or a little bit of chocolate or in it, it's contaminated and then it gets rejected. So it cannot be recycled. And also, those recycling facilities, they're not profitable on their own. They need subsidies. They need government subsidies, so they cannot be operating in certain locations, like maybe less developed countries cannot afford them. They can only operate in the most developed countries, like maybe England or somewhere in Europe, but most of them require subsidies. And then those technologies behind chemical recycling are old, very old technologies. And so Aduro has developed a technology that is based on water, which is a completely different approach. Aduro is introducing a completely different approach. And by the way, the interest for that approach is absolutely exploding. The company is having so much interest from all over the world that originally the company thought that it was going to provide its plastic recycling solution to smaller companies, but it got so flooded with the major companies that it literally had to shift from focusing on the small companies and dealing with the big boys. And why? You see, the main reason is because Aduro developed this technology, and it wasn't an overnight success. They've been working on it for years and years. It's only now that recently Aduro became public, and only now it is introducing that solution. But what separates Aduro's technology is that Aduro can process or recycle plastic, the 80% that nobody else can. So it puts the company in a very unique situation because it doesn't have to compete for that 20% of plastic feed, because you need plastic feed in order to put it in those facilities. Everybody is competing for that 20% that's easy to recycle. So if Aduro, of course Aduro can recycle that 20% too, but if Aduro was focusing on that 20% that everybody can recycle, it wouldn't have any competitive advantage. It would have to compete with everybody else. But Aduro can process the plastic that nobody else can process. So so in other words, below that 20%, and it doesn't even have to go to the hardest of hardest to process. It can just go just straight below, and it is the only game in town. And what's also interesting about it is that the peers or competitors that can process 20%, they're not even peers for Aduro, because those peers, look into Aduro as an extension to what they can process. If they can only process 20%, Aduro is a solution for them to maybe expand that and process harder to recycle materials. So Aduro doesn't even have competitors, it has peers, and the clients not only can be major plastic producers, it can also be the peers or what we could call competitors. And what makes Aduro's technology so unique is that because it's based on water, it takes much less energy. It's less energy intensive. It operates at lower temperatures than traditional technologies, resulting in less energy use. It has lower operating expenses and lower capex, and that is absolutely huge because, as I said, the prior technologies, the old technologies, they need subsidies. Aduro's technology was built from the beginning with a profit in mind. So it doesn't need subsidies, and therefore it can go into developed world, but it can go into less developed locations simply because it is profitable, and also it requires less capex. So to build a recycling facility based on Aduro's technology costs less money to operate, and it costs less money to build, therefore providing a higher return on investment. Aduro's technology, as I said, it works with all types of plastic, not just the best 20% of the plastic feed, doesn't need government subsidies, and maybe one other very important point is that it is very scalable, and it can also work on a small scale, because it's kind of like you can start with a small plant, and then if you wanted to get it bigger, you can just add another, kind of like a rail. You can add another cart, where with the legacy technologies, you have to invest and build a huge plant right away, hundreds of millions of dollars, but then you have to feed that plant. So not only you have to spend a lot of money, you have to feed that plant with the feed that's everybody else is fighting for. So anybody that builds a big facility, it's only for big companies. It's not for small companies. But then those big companies, they have to feed that facility, and they have to import garbage, plastic garbage from overseas, which is absolutely crazy. So that is the unique solution that Aduro has. So problems are an opportunity for solutions. And solutions is what generates revenues. But now, just because somebody has a solution doesn't mean you as a shareholder are going to get rewarded for the solution. You only get rewarded for the solution if your solution is actually profitable solution. Because as I said in the prior section, if you need government subsidies, then what's the point? You can have a solution, but if the solution is costing you money providing that solution, that's not gonna enrich you. The best combination is when you can provide a solution and it generates revenues. So what does Aduro's solution can mean to you or the value of the company? So on page 14 of Aduro's presentation, they have a pro forma financial forecast. And as you can see here, this is 2023, 2024, 2025, 2026, 2027. So you can see that there's barely any revenues during those first 2 years, because what they're doing right now is they already proved that the technology works. They already proved that the chemistry works. They are now in the process of building 2 pilots so that those pilots can be used to engage customers and customers, potential customers can provide plastic feedstock to Aduro so that Aduro can test that feedstock on its pilot and provide data for those potential customers of whether their feedstock can be processed, what kind of product can be delivered, because plastic is inputted on one side, and then various different product can be generated. It could be a product like oil, right? Or it could be something that is used again to produce more plastic. So the company now is in the middle of building those pilot plants, and on a higher scale, on a continuous basis, in order to engage customers. And it's already engaging customers. Now, the revenues from here to here explodes, right? And now the company cannot really speed up the process of how fast it can really get to those high revenues, because the scaling process takes time and it's not going to be shaved off. But during the time when the technology is being tested to provide valuable feedback to the customers, the company is already generating revenues based on those studies, but those revenues are not, huge revenues, right? The exciting part is right here. And now, a technology like what Aduro has can generate revenues in two ways. It can be a licensing model where the customer builds the facility, puts their own capex, they have their own feedstock, own plastic feedstock, and as they process and recycle plastic, Aduro would get a licensing fee. That's the best kind of revenue model because it's the highest margin revenue. The company Aduro can also build its own recycling facilities and own and operate them, but that would mean that it would have to put up its own capex and operate it, and then source the feedstock from places, and then process that feedstock into a finished product that it can be sold. Now, at first, and then the quickest way to revenues is the licensing model. So what you have here is a revenue model for the licensing model, okay? And as you can see here, 95 million of revenues, 2027, with adjusted EBITDA of 78.6. So you can see how huge that profit margin is, because this is what licensing model is. You don't have many expenses. The people that are using your technology, they have to operate it. They pay for the operating expenses. They pay for the capex, and they just send you a check for the technology. So that's why the profit margins are huge. So now, what does it mean to you as a shareholder once the company is successful in generate this kind of revenue profile? Well, what do you think? Let's just call it 80 million. What do you think 80 million of EBITDA is worth? 80 million. Let's take out the calculator. It of course depends on how fast the company grows, but from here, this growth is going to continue. It doesn't stop here. So would you say that 80 million can get 30 times? So let's do 80 times 30. That's $2.4 billion. Yeah, $2.4 billion. Now, what they don't tell you on this chart is that this model is based on many small clients. Okay? Many small clients. Over the last 10 months or so, The company has been flooded with interest from the big players. And there's a lot of big players, like the Pepsis of the world, the Coca-Cola of the world, lots of big players, okay? Hundreds of big players. One of those players, one, can generate them $100 million or $95 million of revenues. One. So now, you tell me, what would the revenue look like if the company landed 10 of those clients? $1 billion revenue? $1 billion revenue with such huge profit margin? Do you think I would be outrageous to think that the company could have a market cap of 20, 30, 40 billion? That's only with 10 clients. So now, let's have a look at the market cap today. About 40 million Canadian, let's call it 30 million US as I'm making this video. So $4 billion, $3 billion US versus 30 million market cap, 100 times. Assuming, of course, no dilution, which there will be more dilution. But do you see the opportunity here? That the opportunity is absolutely massive, right? But I want to point one thing to you. This is the chart. This is the chart of Aduro over the last, year or so. So the stock reached as high as $1.10 in May 2021. And to the recent low, it was down 55%. Now, the thesis that I just presented to you, the upside was the same at this price as it was at this price. So the stock price went down 55%, even though the upside is incredible. So before you get super excited, oh, I'm going to make 50, I'm going to make 100 times my money. I want you to ask yourself, what are you going to do when you buy the stock at this price and it's going to go down 50% because Mr. Market decided that I want to be pessimistic today? Are you going to panic? Are you going to contact me and leave me nasty comments below and say, I thought it was 100x? So I'm telling you this because today the market is absolutely horrible, okay? And anything can happen with the stock price. It doesn't matter what the revenues can be in the future, how much the margin of safety there is, which, by the way, we will talk about the margin of safety. You have to ask yourself, what am I going to do if I choose to be in this investment and the stock price goes down 40, 50, 60, 70, 80%? What am I going to do? Am I going to panic, or am I going to say, you know what? I liked it at this level, I like it more at this level, and I like it even more at this level. So in your head, already plan, this is the thesis. Do I believe in this thesis or do I not believe in this thesis? What am I going to do when the stock price goes down in a different direction that I want to? Am I going to panic or am I going to be okay? Because it's easy when the stock price is going up. So we don't have to cover that. Now, I want to show you one other thing. Cielo Waste Solutions, okay, is a company that was valued at $1 billion at its height here. And it is down 96%. Now, Cielo was the darling in that space when Aduro was going public. Everybody was talking about Cielo, and Cielo did not deliver on its promises. What happened was, and even now, after the 95% down, Cielo has a market cap that is equivalent to Aduro. And Aduro has the solution, and Cielo does not have the solution. And now, so think about this for a second. You have two companies here, and this is very important for me because this company was over-promoted. People were super excited about it. And as a result of this, they were valuing it at $1 billion. And now, because it didn't deliver and it was over-promoted, investors had to pay the price of seeing their stock price decline 96%. Aduro, barely anybody knows about it. The management is not promotional. They have been quiet for years. There's no hype. There is no promotion. And they have the technology that solves the problem. You see the difference? If they have that technology, they can always become more promotional. They can always expose the company to more people. And with this combination, the results can be quite extraordinary. Finally, I want to bring your attention to the report that I wrote on Aduro. And the link to this report is in the description below. So I want to point you to this section. And I wrote this report a few weeks ago, so it might be a little different. But I want to show you the valuations of peers. And you can compare it to Aduro. Pure Cycle Technologies, market cap $1.4 billion. It has no revenues. Right? So I was talking about no revenues. Agilix, 200 million market cap, only 4.3 million of revenues. Quanti-Fuel, market cap 200 million, 500,000 of revenues. Jevo, 500 million market cap, not even $1 million of revenues. And Cielo, what we just looked at, 50 million close to market cap, no revenues. Why am I talking about this? Is because revenues are important, and revenues will ultimately make Aduro be worth billions of dollars. But you can see that companies with very little revenues, even in this market, have huge market caps. Why? Because they provide a solution to a major problem, and investors are pricing in that solution or part of the solution into these market caps. So that's why I believe that when Aduro becomes more well-known, and maybe if it uplifts to a higher exchange, the revaluation of the company's market cap, the company's stock, will happen only based on the exposure. So in the next section, let me talk about the margin of safety. It's very easy to get excited about the upside of any investment, but especially Aduro. I mean, what's not to like possibility of making 100 times your money? I get excited. You know, if you believe in the thesis, you get excited. But one of the most important things for me, especially with a company that does not produce revenues, is the margin of safety. In other words, how much money can I lose? Like, just because you don't have revenues doesn't mean your technology is not worth anything. So when I look for the margin of safety, here are the things that are important to me that provide me with the margin of safety. Number one, insiders are buying shares. Right now, they are buying shares in the open market. That provides me with some margin of safety. Insiders own 48% of the company. That is a lot. So if they lose, I lose. The company has tremendous patents, and the patents alone are worth a lot of money. And this is the question that I asked the CEO when I had a call with him to tell me what it would sell for if they sold it today. So let's have a listen to that. So let me ask you about something else. I always look at companies and the margin of safety. So obviously there is a lot of interest from the customers, whatever. But if something goes wrong and you had to sell your technology or the company, like right now, to somebody, what could you get for this?
This is a great question. If you ask the CEO, so that's me, it's probably over $100 or so million for the patents, easily. If you want the detailed analyze of how you, and this is a really, really, really good question. I applaud you for that. I'll explain, because we've been doing this as a session ourselves to understand, because assets, it's the way it's recorded in the book, which is very frustrating. You cannot do anything with a patent, as you can appreciate. So this is something that bothers me for ages, because we put millions and millions of dollars in it. So the accurate way to assess it is to go to a third-party independent, and there is a formula there that they are looking at, the minimum bare money that you need to sustain against 1 or 2% of the licenses, so not 20%, whatever you would take just to sustain the thing. And the numbers today are in the range of $20 to $50 million. So just to give you an idea. So it's for us, it is, I would not, if I'm in trouble, probably anywhere between, seriously, if we're bankrupt, belly up, anywhere between, $25 to $50 million will be the price. If you would go through a licensing assessment, just we'll pay $100,000 to McKinsey and let them teach them everything we know and let them take this, probably above $200 million.
You said 200 million? Okay, so as you heard, and of course, this is coming from the CEO, which you either believe or you don't believe it. But he said that in bankruptcy, they could get 25 to 50 million for it. So that's the bare minimum. If we compare it to the market cap, which in the US terms, he's talking US, is about 30 million. Do we have enough margin of safety? I think so. And that number, he said, is in the bankruptcies. Most likely they could sell the patents for $100 million. And if they do some studies, it's 200 million. So I think the margin of safety is there. However, the margin of safety doesn't protect you against crazy Mr. Market. Look at this again. The stock was at $1.50. The margin of safety, well, it wasn't, the margin of safety was less because the market cap was higher at $1.10. So maybe it was 50 million, right? But it still declined 55%. So the margin of safety is important if you're a long-term shareholder. If you hold it long enough, it's important. Nothing in the world protects you against the volatility. So I want to make this clear. One other thing that's very important to me is that the chemistry already works. What they are doing right now is building the pilot. So from my perspective at the beginning, it was, there's a huge risk whether the pilot is going to work the way your chemistry works. And later you will find out in the later videos that it's not a go and no go. It's more as how efficient is the pilot going to be. But I posted this question to Anil, who is a scientist, and I posted this question to him when I was there in Canada. And we will listen to him answer the question of what makes you think that the pilot will work. So let's have a listen. So the main issue or the main concern that people will have is whether your R2 will work. But before you answer this R2, could you tell the audience who you are?
Yeah, I'm Adil Jawar, Chief Scientist with Aduro Clean Technologies. I have been working on the development of this technology for past 9 years. So let me explain you why I think the R2 system, which is our continuous scale for plastic, is going to work. What we have done so far is we were working on heavy oil or asphaltene upgrading for a couple of years, and we have tested that system in a continuous fashion. Asphaltenes are nothing but nature's polymer. They are more like aromatic rings which are connected to each other and forms that's what make them heavy. And what we did is in a research lab we had a continuous scale system for feeding in asphaltenes and upgrading that. And what we found that whatever the results we were doing on batch, we were able to mimic that, transfer the technology into a continuous scale, and it performed much better than batch system. So for example, if we were trying to have a residence time of a couple of hours, we reduced it to minutes in a continuous system. And what we got is a really good upgraded product with much better quality than that was obtained in the batch system. And based on those results, we see that if you are able to upgrade in nature's polymer in a continuous fashion, we think that we can extend this technology to the plastic, which are less rigid than asphaltenes.
And so you're saying that you already had R2?
That's correct. We already had a continuous scale R2 system for heavy oil upgrading. The only difference between both the technologies is the way you feed the material. In case of plastic, we didn't have a pumps which can feed a slurry or a extruder to feed the material in. Otherwise, we could use the same unit to test it. What we had in case of asphaltenes is those typically melt, or you can dilute it with solvent and inject it. That's what we did on a continuous scale.
So when he's talking about R2, R2 is the pilot. So he's saying that, you see, the history of Aduro is that they are doing plastic right now, but their technology can be used for 3 different verticals, and you will learn more about those verticals in later videos. But originally, Aduro's technology was invented to upgrade heavy oil. And asphaltene and plastic have pretty much the same chemical components, but asphaltene is much harder to break or recycle. And so they already did the R2, which is the pilot, in a continuous fashion. They already successfully demonstrated R2, and that's why they have conviction that they're going to be successful with plastic, which is much easier to recycle than asphaltene. So those elements between the insider buys, insider ownership, patents, the fact that they could sell the IP for anywhere between 25 million to 200 million, and the words from Anil that R2 is going to work, that for me provides me with enough margin of safety. Now, you obviously have to decide on your own if this is enough margin of safety. I hope you enjoyed this introduction to Aduro. So let's summarize what I covered. I talked to you about how I was introduced to Aduro, how I wasn't interested, and then how I became interested. I showed you how there is a major problem in the world and how Aduro is addressing that problem. And because Aduro can solve this problem in a profitable way, there is significant money that can be made if they are successful generating future revenues. I also showed you So obviously I showed you the upside, which is easy to get excited. I also showed you what I think of the margin of safety. And now there's two more things that I want to talk to you about. One is on April 28th, 2022, Aduro announced closing of oversubscribed private placement. Private placements work in a way that people are restricted for a few months. And if you are anywhere but US, you have a 4-month restriction. In the US, it's longer, it's 12 months. But since the shareholder base of Aduro, I would say it's mostly Canadians at this point, they have a 4-month hold period. So on August 28th, those shares from their private placement will become tradable, and some people might choose to sell it in the open market, and therefore there might be more selling than usual. So you can view it in two ways. If you choose and you want to get some shares, there might be an opportunity for you to get some shares from the people that might sell. Or maybe nobody will sell. Or you might use it as a caution that the stock might sell off when that happens. Obviously, I don't know if it's going to happen, but I wanted to bring this to your attention. The final thing is, on June 29th, Aduro had a press release. Aduro expands and upgrades lab facilities to accelerate research and scale up capabilities. If you scroll down, you will see a paragraph. The company announces it has entered into an investor relations agreement with Investment Publishing to provide financial consulting and investor relations services. The consulting agreement provides for a fee of Canadian $8,000 per month. The term of the agreement is starts on June, and it will continue for 12 months. The principal of Investment Publishing was also granted 150,000 stock options for this. Now, this is me. No. Yes, this is me. Aduro hired me to expose Aduro and help Aduro build its shareholder base. Now, I purchased 450,000 shares with my own money in Aduro, and I'm getting this for IR, helping the company reach more investors. Now, before you start screaming and leaving me nasty comments below, I want you to be aware of one thing. If it wasn't for this, you would never see Aduro. I would keep it under the paywall on MCE. So you can express your dissatisfaction in the comments below, or I have a different suggestion. You can say, thank you very much, Mariusz, for taking the money for IR, because without this, I would never be exposed to this idea. And because you purchased 450,000 shares with your own money, I can clearly see that you have a lot of conviction in this idea, because otherwise you would not be putting this much money into this idea. So now that we have this behind, thank you very much for watching the introduction. There will be other videos following. As I said at the beginning, maybe 8, 9 videos following. There's a lot of information. This is a complicated story. It's about educating you about it. It's not about providing you financial advice. It's not about making you buy the stock. It's about providing the education, and you on your own decide if you want to be part of the story. And if the stock goes up or down, you will not be complaining to me because of Mr. Market's volatility. Anyway, thank you for watching.